I'm going to discuss with you today. As I've been saying, I'm just going to hide these for a second. Yesterday night we had a big news event, and if you look at the daily chart, you can see that in the overnight, actually the euro just gapped up. I mean, the close for Friday was 134.98, and we opened the next day, or Sunday night, at 136.58. We had about 150 or 160 pips gap to the upside, which is, as you well know, all of you as experienced traders, it is a very rare event when it comes to foreign exchange that we have such a gap. And it continued, the gap continued in the overnight for some time. Now, this here on the intraday chart, you can see the gap. And we had all this kind of sideways movement in the Tokyo session, and in this is the London session, and now this is the New York session. Now can you guys see the charts or not? Can you guys see the chart? I mean, I see. I'll tell you what, hold your questions for 10, 15 minutes. I'm going to answer them, but let's get the presentation going, and then I'm going to answer your questions, okay? Lovely. So what happened in the overnight is you had this gap up in the overnight. You would see that the prices this was the close of Friday. That was the move, the gap up. And this is, as I said, it's an extremely rare event in the foreign exchange. And of course, with that, we have to be aware, or some of us started asking, and this morning, you saw all the news events and all the news channels and the media. Everybody's talking about the bailout, the Greece bailout, and this is what's going to happen to the euro and all that stuff. This is the reason behind the gap in the euro. But for us as traders, and I'm going to teach you now one of the techniques that we use every single day whenever we have a news event. The basic technique is that once the news event comes out, once we know why something has happened, okay, then we are going to wait. Listen to what I'm saying now. We are going to wait for about ballpark. I'm just giving you a ballpark. We have much more specific time because we use our software that gives us a little bit more specific time. But you're going to wait for about 20 minutes or so. And after the 20 minutes, you're going to look at the charts and you're going to make a judgment call. So right here, this was the news event. This is when the news came out. Right here where I have the arrow. And that is the period of about 20 minutes or half an hour. And if it's something as specific and as strong as the Greek bailout, you just have to give it, as I said, we gave it about 45 minutes or an hour because this is such a major event and we need to make a judgment call. So guys, let me ask you a question. And this is how we use price behavior in trading the news and trading the market. We don't use any indicators and blah, blah, blah. We don't use that stuff. We are using the price action and common sense in understanding the market and how the traders behave and how we make money out. So I'm going to ask you a question and I want you guys to answer it yourself because I lost some time. Now, if you are short the euro dollar and you heard that the news event, everybody on the news saying that they are bailing Greece and the euro should be flying up, it already gapped up while everybody was sleeping. We were all sleeping when it gapped up. And now when we woke up, this here is the move. This exactly, those 20 pips. That's the move as the result of the bailout of Greece. Now you begin to ask yourself, we have this good news now. What do we expect to see in the market? What do I expect to see if they're bailing Greece? If the euro, the problem of the euro should be solved, quote unquote. If the eurozone is getting back in line and they're sorting themselves out, what should I expect to see happen to the euro dollar? The common sense answer is this thing should be flying. If it gapped up, it's exactly, Fib. If it gaps up, absolutely. So this is the rule. I'm going to write it. I teach this in the class. Exactly. So this is the rule, guys. I'm going to say it quickly, and this is the rule. I'm going to write it down, and I'm doing this especially for you. And this is one of the things we teach in the class. But the rule is, if you're going to make a judgment on the news, hold on, Jiggy. I'm going to teach you something. So listen. Okay? So the news is, if I have good news, and I look at the chart, and this kind of action, what kind of action is this? Is this, if it's good action, this means I am looking for it. Good action, if it's good news, I'm looking for good action, i.e. I am looking for continuation to the upside. I am looking for momentum. I'm looking for high speed. I am looking for something to confirm that the market is accepting this good news. If that's the case, and I see this action, whether it's a pullback or not, it doesn't make any difference. You're not going to wait for a pullback, because if it's really good action, you will not get a second chance to get into the trade. But if that's the case, then you are going to buy. It's going to be a little bit of high risk. It's going to be a little bit of volatility, but you are going to buy. But if you have good news, and as in this case, we're not getting any follow through to the upside, we're getting bad action, i.e. we're not getting an action that confirms the move, then without thinking, without wasting our time, then our bias is to initiate a sell. We are going to go short because that initial move has exasperated it or has satisfied the move, and now common sense is coming back into the market. The traders are not buying back. They are not covering their shorts. They are staying into the trade. So our position is to, right now, to go to sell or to go short.